The reality of it is the expectation of our customer base has changed so much that digital channel is just an extension of your bank, right? Before, I remember the days where the digital channel was considered the alternative channels, right?
Mm-hmm.
And that's no longer the case. So I think really the expectation from the customer is, without thinking about is this digital channel, is this branch, can I use my bank whenever I want, wherever I want, be it the digital channel or the branch. So it's that seamless experience that we build, that omni-channel experience we build, that's really what we need and try to achieve today.
Welcome to Pioneers, the show where we explore the intersection between humanity and AI. I'm your host, Ankur Patel. Over the last 10 years, I've built 3 AI startups, written 2 books about the subject, and I run a weekly AI newsletter. I also regularly teach and speak about the topic at conferences. This technology has grown faster than I think any of us could have imagined, and it's making us ask really important questions, such as, how ethical is AI? What will this technology look like in a few years, let alone a few months? And most importantly, does it have the power to truly change the world? And what does it mean for you? On this show, I'll be interviewing the founders, operators, and pioneers that are introducing AI into their companies and industries. We'll be asking them the really heavy-hitting questions that make them dig deep into the core of what we do. And without further ado, let's dive into today's episode. Banking is changing fast. Fintech partnerships, digital ecosystems, and AI are reshaping what innovation means in financial services. Today's guest, Izge, leads strategic innovation at Valley Bank, where she helps bridge traditional banking with the fintech future. Izge, welcome to Pioneers.
Thanks for having me, Ankur. I'm really excited to talk about how innovation is evolving inside banks and what that means for the industry.
Perfect. Well, let's start at the very beginning. I mean, you've had this incredible journey, from senior VP of digital products to director of product innovation, and now director of strategic innovation at Valley Bank. How did that path take shape, and what motivated each step?
Really, I've been passionate about translating emerging technologies into business outcomes. So at Valley Bank, I've been fortunate to move from execution in my digital products role to exploration in this strategy and innovation role, and get the chance to see how both sides need to work together to make innovation real.
So let's actually drill down into that a bit more. So the digital products, right? I think there's been this paradigm, at least in the last 10 years, where traditional banking, like the big banks, they did traditional banking like experiences, and then fintechs kind of introduced digital products, maybe through neobanks and other experiences. And I think it's not so bifurcated anymore. Now the big banks, either organically or through acquisition, have developed those modern experiences as well. So could you talk a little bit about the types of digital products that are now perhaps more common in the traditional banking sector, whereas perhaps they weren't 10 years ago?
Yeah, absolutely. I think the reality of it is the expectation of our customer base has changed so much that digital channel is just an extension of your bank, right? Before, I remember the days where the digital channel was considered the alternative channels, right?
Mm-hmm.
And that's no longer the case. So I think really the expectation from the customer is, without thinking about is this digital channel, is this branch, can I use my bank whenever I want, wherever I want, be it the digital channel or the branch. So it's that seamless experience that we build, that omni-channel experience we build, that's really what we need and try to achieve today.
Yeah, it's interesting to see how those different channels are melding. So it's a kind of a 360 experience. You could bank in different ways on app, through phone, through in person, right? All those become viable avenues, and it's consolidated quite a bit.
Yeah. And now you have to think about agentic channels as another extension of that relationship.
Let's drill into that a bit more. So, obviously the move from digital products, maybe that's the last 10 years here in this space. And now I think you're moving into strategic innovation, as you said, agentic. Could you kind of maybe give us a sense of what kind of conversations are happening behind the closed doors around what the next, call it 3 to 5 years of strategic innovation looks like?
One thing we're very deliberate about is whatever experience we build, it needs to be anchored to our strategy.
Mhm.
So it's no longer a collection of features, going back to your previous questions. It's not another feature on the digital channel. It's about what are we trying to be for our customers? Are we that trusted advisor that can, yes, bring them the needed banking experiences, but also open their eyes or help them navigate other functionality that they need to tap to run their businesses? So at the end of the day, what's our strategy to be that trusted advisor, not just today, but also in 5 years? And what are those building blocks we need to tap to get there?
And then in terms of maybe conversations are happening around types of AI, right? I mean, you mentioned agentic. Could you maybe drill more into what type of AI exists, perhaps? And the reason why I want to drill on this is like, I think a lot of people, when they think about AI, they're mostly accustomed to ChatGPT or Perplexity or Claude, right? So prompting an AI to get answers back, more about knowledge management. When you say AI or maybe agentic, what do you refer to with that?
Yeah. Maybe just to take a step back. I mean, yes, AI has been very loud, let's say,
Yeah.
recently. It's not new, right? Like we were using the ML models in our like fraud side of the house, and like traditional AI has been part of the bank. What's changed is, yes, that kind of the generative AI kind of magic that both our internal associates can use to become more efficient in their day-to-day job, but also for our customers to interact with.
Mm.
And in that sense, the first phase is kind of the typical, like, can we leverage LLM backed, chatbots and voice AI to get us up to a point where we're really talking to the customers on those critical issues, and not the what's my balance, what's my like payoff amount. So that's the first piece. But really what excites me is using AI to really automate our workflows.
Hmm.
Right. So that's why, like on the agentic side, and I said initially that we're more on the augmentation phase and not automation, but there's a clear path to, again, certain tasks to be fully automated as we build the trust in AI, as we build the explainability and the model governance around it. I think we'll end up in a future where low value add tasks will be automated by
Hmm.
a swarm of agents possibly, and then
Yeah.
we'll really focus on the value added human to human conversations that gives them that feeling of we're their trusted partner.
No, I think that's beautifully said, Izge. I think it takes those phases, right? Moving from augmentation to automation. Just because the technology is there doesn't mean that it can be easily adopted. Not in a very complex and heavily regulated space like finance. So maybe kind of opening up the aperture just slightly, building an innovation culture. And obviously, one of the things that at least anecdotally is said is, banks often struggle with speed, and I think outsiders, when they look at the space, they wonder, why does it take so long
Yeah.
to get things done? And usually, like, regulation is kind of one term that comes up. But what are the major things that a bank needs to balance that, let's say, another vertical that's non-regulated perhaps doesn't have to consider so much, that is important in terms of adopting newer technology like agentic? Because as you rightfully said, this is not necessarily new in the sense that AI has been around in like predictive AI form and other variants, but now this new mold like agentic AI as an example. Obviously, it's very innovative. It has a lot of potential, but there needs to be balance with the rest of the things that a bank values.
Let me start by saying I was on the other side of the coin where I was head of product for a small startup trying to sell to banks. And
Hmm.
I was definitely asking the question, why is this taking so long? But coming to this side, I really learned to appreciate a lot of the complexities. And you're spot on. So the core challenge is that balance and speed and reliability. And really, we know that as banks, we can't just move fast and break things in banking, right?
Mm-hmm.
Like we could as a startup. It's all about what's the risk associated with breaking that thing. And for banks, that is very high. So to really navigate that, you need a framework for responsible innovation with clear guardrails, testing sandboxes, and cross functional collaboration. And I really want to underline that cross functional collaboration because it's also knowing who in the bank should be involved at what point.
Mm-hmm.
The way we tackle that is like we try to bring our risk and compliance teams in early, and it might be counterintuitive that you're engaging a lot of people at the beginning, but really you're actually accelerating the innovation instead of slowing it down. And I'd like to, I really see our compliance team as one of our closest collaborators in innovation.
I mean, I love that clarity because it's not about having innovation lab as a isolated in its own island, operating on kind of noodling on new ideas. It's really about figuring out what does it take to serve the rest of the bank in the reliable manner that bank needs. And I think bringing that together, like having collaboration from the compliance teams early on and throughout the process, I think makes a huge difference. And then how do you think about getting that adoption piece? Because I remember that was one of the things you called out is like adoption is a key KPI that has to happen, right? So could we talk a little bit more about how that is engineered in some ways with the organization?
Again, it goes hand in hand with not having innovation as a side project. So just like we involved our risk folks early on, we innovate along with our business partners, and not just the management, but also the people who will use this, right? At the end of the day, the use cases we have, it's a lot of times is a way to augment and bring efficiency to our associates. So if we don't have the buy-in and if we don't give them the right tools and the learning opportunities to really upskill themselves
Mm-hmm.
to leverage AI, then they won't use it. This will be yet another tool, like shiny tool that was tried and put to the side. So that's why getting their buy-in from the start and then holding their hand to get to that ultimate point of, okay, this is what good looks like when you really use this solution, I think is key to get to adoption.
Let's talk more about fintech partnerships and how they could be an accelerant in that journey, right? So obviously, Valley Bank has a ventures arm, Valley Ventures, and I think part of the mandate there is to invest in fintechs that the bank can find value from. And I think that model works really well because you take the DNA that startups have, but then you bring that DNA in partnership ways to help the organization. And then, of course, Valley benefits from the investments it makes. Could you walk us through how you choose and then work with fintech partners?
Yeah, absolutely. So really of course we invest for financial returns, right? But we always look for strategic fit. Is this something that solves a real problem either for us or for our clients? In some cases, we identify companies that solve a problem for the future of Valley. Maybe we're not going to use it today, but is this a Horizon 2 or Horizon 3 solution we can bring in? In some cases, one of our business units actually identify a best-in-class solution for their usage, and we follow that up with an investment because we're getting that validation from the
Mm-hmm.
actual users. But really, the common denominator is that it solves a big enough problem for the bank or for our clients.
And then of those investments that you make, how many of them roughly end up being used internally?
I would say we're close to 50%. And one trend that I'm seeing, and for various reasons, right? Some of them are more customer facing and our customers are using them. But for the ones that we're using, the other thing that really, the partnerships that shine is the ones that we also get into this design partnership relationship. So it's, yes, we're getting the value of using that product, but we're also giving back in terms of getting their product to the next level because we're not in the business of just capital deployment. We're there to help capability build as well.
And I think there's this big conversation that's happened in the last 2 years or so around, is AI best for internal processes or for external customer interactions? And I know you used to lead the Salesforce product team at Valley, building and launching customer-facing solutions. It seems like now you're focused on strategy and ecosystem design. What's been kind of the big shift in terms of mindset going from the two worlds?
Yeah. I would say the biggest mindset is like Salesforce was kind of my hammer to build things, right? So I was always in a build first mindset. But when you're in strategy, you really need to make sure we're capability building. So build and buy is part of your toolkit. It's
Yeah.
just that balance of which one's the right area to build versus buy, or which, if we're after speed, one is better than the other. But if it's something that's core to the bank and helps us create strategic advantage versus our competitors, maybe that's a better candidate for build. So it's that kind of taking a step back and really having all of those as part of my toolkit instead of just the build mindset.
I think that's a great kind of just perspective, which is like when you're deep in a product role, you're just thinking about build, build, build. You just kind of ship that one thing. In a strategy role, it feels like you have to take a much wider lens around what are the things that need to happen to help and benefit the organization. And then some you build, some you partner on. And there's like a really interesting set of decisions that have to be made. And I think it requires, I mean, strategy is in the name, but it requires strategic thinking. It's like you can't just think about the next 6 to 12 months or the next like cycle of work. You have to think about where does this go 2, 3 years down the line, right? And so that's been very interesting. And would you say that that transition now is something that you feel very good about, and that's been kind of a good transition for you?
Yeah, absolutely. I mean, I do joke, I think I mentioned this, like, I feel like I'm the internal matchmaker of the bank. Sometimes it's to our fintech partners, but sometimes it's also the different, like, similar thinking is happening in different business units. And can I connect those dots for the enterprise level? So it definitely allows me to like bring in more systems thinking and more enterprise level value creation.
Systems thinking, that's a great word for it. Maybe switching gears here, I want to talk a little bit about use of AI. And obviously at this point, this study now has become maybe the most talked about study, the MIT study, where 95% of POCs and pilots don't make it into production. And that's obviously just one data point, one report, but it's called like the zeitgeist, which is how do you actually get value from AI? What are the things you ought not to do? So painful lessons. And what are the things you should do in order to get value? And there's a lot of hype and maybe promise. And then, basically companies are now much more focused on ROI. And I think 2026 will be kind of a focus on return on investment, less experimental budget and experimental kind of work, and more about let's drive some real value. So could you talk us through a little bit about how you're approaching AI at Valley Bank today?
Like I said, initially, we see AI as an augmentation tool first to help our employees be more productive and make better decisions. But we are experimenting with agentic systems that handle document processing and customer insights, but with strict controls around data and explainability. Going back to your comment about the failed POCs, I think we need to remind ourselves how fast the technology landscape is changing. So something, I mean, we've looked at a lot of solutions that at the time looked amazing, and one of the main players just switched the button and kind of made their solution obsolete. So is that a fail of the POC of the bank, or is that a fail? Is that a natural consequence of how fast the technology is moving? So that's one thing. The other thing I will say is where we find success is when we start from the business problem and not from the technology, because there's no shortage of really creative solutions out there. But if it's not matched to the right problem, or if it's not going back to like that big enough problem, if it's not a nice to have, yes, you're willing to try it out. But when it comes to putting the hard work to go through governance, go through implementation, you better make sure it's worth that effort.
Let's talk a little bit about augmentation, because I know that's like the first phase where I think
Mhm.
Valley is seeing value. Could you talk us through maybe one of the stories around where employees are being augmented via AI or AI tools to help them perform their work better or serve the end customer better?
This use case is, it might not come across as an immediate augmentation use case, but I think it is. So we're one of the pilots we're doing is a voice AI use case for collections.
Hmm.
Now, I don't think any, I mean, I don't want to speak for our collections colleagues, but I don't think that's a pleasant conversation to
Hmm.
have,
Yeah.
right? So really moving that unpleasant conversation to something that's neutral, and really the results we're seeing from the initial set of customers that tried this out is really positive. So it feels like both sides appreciate this neutral approach to a difficult conversation, and then this allows them to grab the few more difficult conversations that require the nuance, and they can do a better job of making 5 calls instead of 100 and
Hmm.
focusing on those 5 calls.
I think that's a super smart use case, because I think that AI is able to create, yeah, that neutral tone, and it's able to get more context and color from the delinquent borrower, right? And that might be helpful to then to like the human collection team to go and figure out what's happening and how to address it. But you could also build these workflows where it's still very much AI driven, but it's able to remedy and help kind of move that along. But it's a fascinating use case, and you're able to do calls at a scale and at a level of personalization that makes more sense. So I think that makes a lot of sense. And then I think the other comment you made is, obviously moving from augmentation to something that's more maybe more towards automation, more agentic in nature. You need strict controls around data and explainability, right? And
Yep.
could you talk us through, how are you thinking about building that into some of the agentic conversations you're having? Because I think that's a critical piece, which is you need that for internal teams to feel good about the work that AI is doing. Like, what is it doing? Why is it doing it? How did it come to this conclusion? But you frankly need that for regulators as well, right? To kind of go and
Yep.
meet the regulations and such. So curious what the approach there, at least is like the framework for that. What does that look like today?
Honestly, it's about using AI to support AI, right? Because we're not going to get there with a human oversight of what AI is doing. But another way to look at it is, especially when we're talking about agentic AI, it's the same level of scrutiny and kind of making sure everyone's in the right kind of lane as you would do to your existing associates, right? So it's in a way managing a new type of workforce that includes AI workers that need to abide by the same rules and need to have explainability of why they're doing something they're doing. So there's no room for a black box. Okay,
Hmm.
we're so good at this, but you can't see what we're doing. That's not going to fly in banking.
Yeah.
Just like if I have a teammate who comes up with a brilliant idea but can't show me the work,
Sure.
that's not going to fly either.
One of the things that we're seeing from our work, piggybacking off of this, is that context engineering matters, and there's a lot of expertise that people have in the work that they do that is not necessarily well documented, or maybe it's inconsistently documented. And I think the hard part is how to get AI visibility into how to actually do that particular type of work, right? And so having good context engineering, having good feedback cycles, having good documentation that's created for AI to learn from, that's really important. Otherwise, like, the AI is kind of working in the dark. It's like a new employee that hasn't been trained to
Yeah,
do this work in ways that
exactly.
like veteran employees know how to do it. And so that when the AI tries to take a stab, it's a very poor stab, a
Yeah.
very poor outcome. So I'm curious how you're trying to go about building better context engineering and documentation to help train and inform an AI on how to do this work.
I mean, you're approaching it from document side of things, but it's the same for data, right? Like
Hmm.
we, I think, all heard the success of any of our AI use cases. Like a successful AI is as successful as the quality of our data kind of infrastructure.
Hmm.
So we've been very focused on getting our data house in order, even before this was as popular a topic as it is today. So I think we're definitely benefiting from, like, we're collecting the fruits of that effort that at the time probably wasn't as clear to. Of course, we all want, clean and accessible data, but I think now it's very clear what an advantage that has created for us to build on top of.
I want to move on to what banks can learn from tech companies. So having worked closely with fintechs, what's one lesson you think banks should borrow from startups?
I think that fast fail mentality. Now, I know I said we don't want to break things fast, but we also want to make sure we try things fast and either decide which one is worth moving forward with, but also kill the ones that shouldn't go further fast. And the way to do that is, I think in the past we had an approach where, like, you take even a POC through the same rigorous governance process even before you've kind of validated the fit of that solution. What we do differently now is, for example, we have a sandbox as a service partner in Naya One that helps us try out the solutions before we even open the Pandora's box of show us your technology, because we're de-risking that experimentation culture by using a partner like that. And that way everyone's, I think, it's also doing service to our fintech partners because, like I said, I was on the other side of it, and
Yeah.
I know the pain of 18-month sales cycles, and you don't have the deep pockets of a large vendor to do that if you're not selling, right? So I think it benefits both sides through that rapid experimentation and validation, and then you have more confidence and more data driven business cases that then you can do your internal selling, because at the end of the day that's part of the job.
Yeah, that learning velocity I think is really important on both sides, right? The startup gets to understand, hey, what's the use case, what's the pain, how do we solve for it, what is the true nature of the challenge, and then I think the banks quickly get to see which startups actually make sense to pursue deeper conversations with, and I think you get to a much better outcome and set of learnings if you have that sort of environment on both sides to work through. What do you think fintechs could learn from banks?
In that case, it's how to scale responsibly, right? Innovation without risk discipline can break trust fast, and really trust is the one thing you can't afford to lose. So the sweet spot is that combining both of those cultures, right? Speed plus stability.
It's funny you say that, Izge, because it's very much kind of where we are as a startup. So we have customers in production with a lot of features that are mature, and the mantra there is stability and reliability and handling scale very well. We want to make sure that is as robust as can be and has all the trust and governance features our customers need. And then there's another part of the team that is very much prototyping, moving quickly on net new features, right? And so you're indexing for speed and learnings and just prototyping. So it's almost like you're running two types of startups. One startup is a little bit more mature because it's in production and has a set of features that have to work well and keep working well going forward. And then another part of the team that is kind of working on new things. So even though a startup, you think it's all one and the same, there are different teams, different feature sets, different cycles of work based on what is kind of production ready and that you've sold and you have it with customers versus like what are the things that are coming down the pipe that are really valuable. That they will serve the customer well, but you have to get them to kind of move beyond the prototype stage and become more mature and stable for actual production use.
Well said, and absolutely. I mean, I love how you put it. Like, you're running on two speeds: one for production, one for innovation. In a way.
Yeah. In that sense, is it not different than more traditional bank,
Yeah,
right? But you have
absolutely.
more things to protect. You have a bigger brand, bigger reputation, more mature parts of the business that need more reliability and stability and scale, and then maybe less innovation just as a percentage of the overall endeavor. But every single organization, as you go from a very small startup to a very scaled startup, or obviously very large bank, you just index more and more towards stability and reliability. So it's like I think there needs to be empathy on both sides as to like how the other one operates and what they're able to deliver. But I'm glad we're having this conversation because I think for our audience it'll be more visible the types of trade-offs that different types of institutions at different size and scale have to make in order to go and do AI well today.
Yep, absolutely. You're spot on.
Where do you see the big shifts in banking over the next 5 years?
That's a great question. I think we'll see a move from products to platforms, and what I mean by that is like banks won't just offer accounts and loans, but we'll start curating ecosystems of services, data, and AI-driven insights around our customer. I think that's where true strategic innovation will happen, and this will really anchor the bank's role in the lives of our customers.
And who do you think the winners will be in that backdrop?
I would say definitely the ones that can partner well, right? Because we're not going to be able to build all those solutions to power those ecosystems by ourselves. So the ability to co-create with fintechs, regulators, and customers will define the next generation of banks.
And maybe a quick question for our audience, because I know you are yourself very well versed around AI and agentic, and I think a lot of the people we speak with in the banking world, they're in some cases they are also well informed, but some feel like they are behind the eight ball because things just move super fast. There's so much that's coming down the pipe. So, what are some words of advice or resources that you rely on to make sure that you're up to speed on the latest things that are coming down, like a technology realm, that you should be aware of and introduce to the broader bank that you operate?
I definitely rely on my LinkedIn community to start with. But I have to say, I learned so much from the conversations I have with our fintech potential partners. We might not partner today, but that's a very, again, symbiotic way to learn from each other. So that keeps me like, I get the signals from who's building what, and am I starting to hear the same approach in multiple places, or are some of the trends dying down? So that's one thing. And I really rely on some of the podcasts, less so on AI, but on like trends in banking.
Yeah.
Your Alex Johnsons and like Jason McCulloughs of the world. I can't, they're definitely great teachers for any bankers out there. And, podcasts like yours. So always have my ears on the ground for useful information like this.
Izge, this has been a truly incredible conversation. Thanks for sharing your experience on what strategic innovation really looks like from the inside. And where can people follow your work or connect with you?
I'm definitely very active on LinkedIn. And if they're based in the New York area, I try to be present in any events that bring banks and fintechs together. So look me up. You can search for Izge or Izge Cengiz Ercan on LinkedIn, and, feel free to reach out.
Perfect. Thanks again for joining us, Izge. And thanks to everyone listening. Don't forget to subscribe to Pioneers for more conversations at the intersection of AI and financial innovation. Izge, thank you again for being on the show.
Thank you for having me.